Good evening, everyone. My name is Paul Young. I'm just going to walk you through GDP analysis and trends. The goal with this presentation is to kind of show you where we're at as of May 2016, or basically into June, and the factors that are going to drive GDP for the rest of the year, and some of the factors as well as the threats that are going to impact on GDP. Now, this is one only forecast. You're more than apt to go to the CIBC, Bank of Nova Scotia, RBC, TD, different sites to get their perspective in GDP and their assumptions, but I'll give you my assumptions as well as what I think will happen. A little bio about myself. I'm CPA CGA by trade. I focus on getting information out because I have a background in academia, financial solutions, and industry. I'll talk about economic growth in terms of the reforecasted numbers as of the beginning of June. I'll talk some assumptions, what I'm building into my model in terms of what I'm forecasting out. And I'll talk about some issues, whether they're geopolitical or just the pressure on commodities, and have a good discussion on that as well. So if we look at now the revised forecast for GDP growth for 2016, globally it's still about 3%, but Canada's been downgraded by about a half a point, and a lot of that has to do with what's been going on in Fort McMurray with the fire and some other impacts as well. But predominantly, the Fort McMurray fire has removed about 1/4 of our exports of oil, and that will have an impact on GDP for this quarter. So, economic forecasters are factoring that in, that we likely will see a decrease in GDP for the second quarter, and that's what's factored in. But what I want you to do is look at the numbers here in general. You are not seeing overwhelmingly strong growth numbers. So one of the strategies seems to be worldwide, or a push to do a stimulus. The problem is right now a stimulus won't do any good when you've got weak commodity prices or a weak consumer spending in some of the countries. So that's something you have to factor into when you're starting to look at these numbers. So you just don't throw monies at an issue when you've got structural issues with the economy as well as overall factors driving global growth. Now, the assumptions I'm going to put into this model is oil likely will be forecasted over $50 a barrel by December 2016 consistently. I'll also talk about the stimulus spending. That's the money promised by the federal government. We already had existing programs like the gas tax and Build Canada funds, but the government's going to expedite the money in those funds to help get infrastructure up the ground. That's kind of leading to, when you look at the employment trends, that we're seeing a strong construction industry. But now, bear in mind, construction jobs are temporary. Yes, we need those jobs, but they're not something that you see overall. There's always a blip up and down based on housing starts and infrastructure commitments. Automotive is going to see a strong market, about 21 million units, but it's only going to increase by half of 500K. So really, we're not seeing significant improvement year over year. We're seeing marginal, and that's factored into the numbers. Housing starts are about 1.1 million in the US and about 200K in Canada, so they're pretty strong, pretty healthy. I'm forecasting about 2.1% growth in retail sales, because 2/3 of the economy is retail sales. I'll talk a little bit about export sales, where I believe marginally they'll be up, more so because of the U.S. economy versus the rest of the world, because in general we're seeing slow growth, but we're also seeing where we're not seeing the trade deals kick in yet in terms of TPP or CETA or some of the other deals Canada signed, but those will gradually have an impact as economies in those countries and areas pick up. So let's look at what I project out. Now, I'm projecting marginally a little bit better than what the banks are. And the reason I did that is I looked at the energy sector and I looked at manufacturing that I believe are going to be a bit stronger, mostly driven by key areas like food processing, forestry, and automotive. I believe that's going to be setting the trends this year for manufacturing. I also believe in the service sector, especially the retail side, will see growth in terms of the overall GDP impact, so that's part of the reason why I'm forecasting out. But I'm really concerned about public administration, because I believe that number actually might come down a bit. So it's something to bear in mind when you're looking at these numbers, because they're only one perspective of that, and it's something that to bear in mind that when you're looking at the numbers, that you keep that in play. Now, what are the threats and risks? Well, a couple things. We've got significant government policies coming in. Ontario's bringing in a carbon tax and a registered pension plan. Alberta's bringing in the carbon tax. Now, the way they're spending these numbers, they're not spending them correctly. Whenever you assign a new tax on anything, that tax gets passed all the way through the supply chain to the end consumer. That's not factored in when you hear the discussion. Is the impact of these taxes can become up to $500 to $1,000 taken out of a person's pocket at the end of the day. That means less money spent on consumer spending, so that could drive that number down where it's 2.1%, eventually driving it down a bit because people won't buy as much because they have less money. I'm also banking on the fact is how quickly the government will get money into the pockets of municipalities and provinces for the infrastructure builds. Now the key thing is we've already seen issues happen with infrastructure money being wasted. In Ontario's case, we've seen P3s wasted money, and it's something to bear in mind. Geopolitical issues, instability of governments. We have a U.S. government, new government coming into play, and there's some power struggles between Trump and Clinton on the direction of what will happen there. That will have an impact later on in the year, going in 2017. And we've got some really contagious areas that could spread. South Africa, Brazil, Venezuela are all key areas that you're seeing struggles with government issues there. Venezuela has collapsed. Brazil is in a deep recession, and you need to factor that into it. Japan's not stable either. There's considerable issues in Japan with their debt to GDP. So why did I pull on that? Because geopolitical things will drive government policy. Government policies will drive how economies respond, and that's something to bear in mind. We're also seeing sluggish wage growth. We can't get above the 2.1 inflation. We're seeing growth about almost 1% growth, and that doesn't keep pace with inflation, and that's something to bear in mind. If we're seeing sluggish wage growth, it'll impact people's before tax income and after tax income. Now, I didn't talk on taxation policies because most of the cases the provincial and federal government went after the 1%. They didn't go after the middle class. They tried to stimulate a little bit of the middle class with the cuts, but the problem is even those cuts are going to be offset by taxation areas like carbon and carbon taxes in Ontario and Alberta, so that's something to bear in mind too as well. And the other thing is other provinces will impact on that depending on that goods gets flowed across the provinces. The consumer price will be set by that. That's something to bear in mind as well. Capital investment, this is key areas where we start looking at in terms of where the investment's going to be. The federal government in the past had made commitments to expand ports like Montreal, Sydney, Vancouver, Prince Rupert, so whether they commit on that will have an impact on the economy, also or eventually to exports, and that's what drives exports is we need to have the capacity. There's some energy decisions going to be made on some key pipelines. We've got commitments where countries like Malaysia, Indonesia, China, and even India down the road want our energy products, but we don't have the capacity to get to the market, and there's a lot of debate with the National Energy Board how these projects will get kicked off the ground. That being said, they don't impact GDP directly, but they will impact GDP on construction and oil exports down the road, and that's something to bear in mind. We had one major disaster, the Fort McMurray fire. The economy is so sluggish right now, if we get another impact, it could have another quarter to a half a point to our GDP numbers, and that's something to bear in mind as we move forward in terms of things. Because a lot of cases, government's risk management policies have kind of not kept to date in terms of looking at the overall threats to governments, especially in the forest management area. They've done less and less proper burning techniques and other things to clean up areas of threats around those areas, and that's something to bear in mind as you watch the economy move forward, and especially if we see certain things happen like floods or other issues, how we respond will have an impact on GDP as well. So we need to bear that in mind. All I'm really saying here with this picture, as much as people want to say we're going through periods, we are in slow growth. There's limited exposure of what a government can do to help support economy. Typically what government should do is not bring in policies that will hurt business. Business can respond to policies, but the problem with business can't. They can't respond to a multitude of policies at once. And when you put shock and awe into a sluggish economy, you may see residual impacts of that with more slower growth. And if we see slower growth, that means slower revenues coming into the federal government. That means cost pressures on those governments to live the same service with less revenue, or they're going to look at taxation more. And when you start taxing people, you're actually taxing people beyond a certain point. And when you do that, you're causing more issues in terms of consumer spending. So there's got to be the right balance. But this presentation wasn't designed to call governments for their poor fiscal management policies. It was designed to say that their threats There's impacts to this country that will impact GDP, and it's GDP that drives the government's revenues and drives job creation. It drives consumer spending because 2/3 of the economy is consumer spending. So that's why I wanted to do this presentation, to get the information out to people so you can question both your local politician at the municipal level, your provincial MLA or MPP, or your federal government MP, and ask them, like, what's going to happen with the economy in terms of government policy? How are you going to support trade? How are you going to support the retail sector? And these are questions that you probably want answers. So that's the reason why I did this presentation, to get the information, the facts out on the economy. Thank you.